Good morning. This is John Richardson speaking with you from Toronto, Canada. Today is Thursday, July the 2nd, 2026. And my guest today is U.S. tax lawyer Virginia Torre Jeker. And this is a podcast that came together very, very quickly. We are discussing a procedural change in compliance, which appears to have taken effect yesterday, July 1st, 2026. And very specifically, the IRS has removed the Delinquent FBAR information procedures from the general toolbox of options available to people with compliance problems. So, Virginia, how are you today?
Hi, John. I'm doing great. How are you?
I am okay. Do you agree with my characterization of what just happened?
Absolutely. This does not appear to be any kind of inadvertent removal of the delinquent FBAR submission procedures page. And yeah, let's talk about what it might mean for people.
Okay. So I think what we need to do is, first of all, let's, in a very just sort of common sense, people oriented way, explain what it was without technicalities, what the significance of it was, and then let's backtrack with a little more detail. So, what were the delinquent FBAR submission procedures in a very general and simple sense?
Okay, in a very general and simple sense, this little toolbox tool was available for taxpayers who simply had not filed so-called FBARs. Now, that's the commonly called the foreign bank account report. It deals with any accounts you have at foreign financial institutions. And of course, it gets detailed what is an account, but we won't get into that. Let's just talk about who could have used this special tool in the toolbox. It was someone, a taxpayer, who didn't file his or her FBAR, and they were not having any other problems with their tax return situation. So, for example, they didn't need to use either the IRS criminal investigation voluntary disclosure or any of the streamlined filing procedures to file late tax returns or amended tax returns to report missing income and perhaps to pay additional tax. So they also could not be under a civil exam or criminal investigation by the IRS, and they must not have been already contacted by the IRS about these delinquent FBARs. So in a nutshell, that's who could have used the delinquent FBAR procedure. And now that is no longer an option.
Okay, so in summary, would you agree with me if I were to say it was aimed at people who had no problems except for the failure to submit FBARs?
Yes, in a simple sentence, absolutely.
Okay, so let's go with that. Now, what I think is extremely significant about what these guidelines said, and I want to actually read these two or three sentences in. What it said was the IRS will not impose a penalty for the failure to file the delinquent FBARs if you properly reported on your U.S. tax returns and paid all tax on the income from the foreign financial accounts reported on the delinquent FBARs, and you have not previously been contacted regarding an income tax examination or a request for delinquent returns for the years for which the delinquent FBARs are submitted. So basically, what this appears to be is a commitment from the IRS that if you miss the FBARs and if you file the FBARs, the IRS will not impose a penalty.
Correct.
Now, that, given the law of FBAR, you would agree is extremely significant, right?
Oh, yes, because those penalties can be quite stiff.
All right, so they certainly can be. Now, would you agree with me that in the absence of these delinquent FBAR submission procedures, that we're really just defaulting back to what the statute itself says? Would you agree with that?
What do you mean, the statute?
Well, so if we look at
FinCEN, the
31, the
bank,
law of FBAR,
yeah, the
31
Bank
U.S.C.
Secrecy Act.
Yeah, 5321.
Yes,
All right, provides basically the penalty structure.
that's right.
Okay. So without that safe harbor, do you think it's appropriate to call the former delinquent FBAR procedures safe harbor?
Yes, I would say so.
So without that safe harbor, to understand this, we would simply look at the statute itself. Would you agree?
Yes, without that safe harbor, John, you're in the you're a ship in troubled waters, I would say.
Right. You're a ship in troubled waters where the navigational map, at least the starting point, would be the statute itself. Now, one thing that I found interesting about the safe harbor provision, which is no longer there, is do you notice that there was no mention of having to show reasonable cause or non-willfulness or anything?
Correct.
Yeah, and that is incredibly significant, right? Because that's just saying, all right, you missed it, go ahead, file, report the income, and we won't impose a penalty.
Report the account. You must have, remember, reported the income from those foreign financial
Yes.
accounts.
Absolutely.
So,
So in
yeah,
other words, we get our money, we get you to report, there will be no penalty, and we're not going to get into the issue of reasonable cause or anything, right?
that's correct. Now, as I remember, and I don't file these delinquent FBARs, but as I remember my colleagues who do, there was, I think, a drop-down menu saying, the reason you didn't file it.
Absolutely.
And there was kind of this, I didn't know, I didn't understand something
That's
similar.
right. Yeah, I didn't know, I forgot, and I think
Yes.
and there was a
So,
box or streamlined, right? You could check off streamline, this sort of thing.
yes,
Could do that.
yes.
That's right.
So, in other words, what I'm trying to get at is even though the IRS webpage that no longer exists does not talk about non-willful and doesn't talk about reasonable cause, that you would have to click something when you filed the delinquent FBARs under this procedure that no longer exists that indicated non-willfulness or negligence or something.
I think that's right. I think that's right, that the process of doing it would have involved having to commit to some kind of a reason, and that reason was probably consistent with some definition of non-willfulness.
Yes.
Okay, and of course, all of anything that bears on non-willfulness also, I suppose, would be part of a reasonable cause defense, right?
Mm-hmm.
Okay, so we've now defaulted back to the statute itself, and what's interesting here is that, and I think this is really, really key. It would be wrong to presume that ending that program would mean automatic penalties because I think it's important for people to understand what the law actually says is penalty authorized. It
Mm-hmm.
doesn't say mandated or required, penalty authorized. The Secretary of the Treasury may impose a civil penalty on any person who violates 5314, meaning they didn't file an FBAR. So it's not
And let's
mandatory.
remember, John, that's absolutely correct. It's may, and it gives them discretion. And let's remember as well, the Internal Revenue Manual does contain a discussion of what might be the appropriate response to someone who has not filed an FBAR. Is it a penalty? Is it a warning letter? What is it? So
Right.
there is still that discretion.
Absolutely. And I think the manual also has language in it that says the objective is to encourage compliance.
Mm-hmm.
Okay. So penalty is certainly not automatic. Okay. Then the next section here, if one is going to impose a penalty, what would be the amount? Now, the penalty authorized is limited in the case of a civil non-willful to $10,000 or the inflation equivalent adjustment, which I think is now 16,000
Mm-hmm.
per form and not per account based on the Bittner case, right?
Yes. Yes.
All right. So tying that together, I'm thinking out loud. Maybe you can confirm or say, now we want to tweak what I'm about to say. So, one, the FBAR delinquent procedures are gone, meaning that the IRS promise or commitment to not impose a penalty is gone, number one.
Mm-hmm.
Number two, we're sort of punted back into the statute 5321, which provides statutory authorization to impose a penalty, but not a requirement to do so. Three, in the event that a penalty is imposed for the civil non-willful, that would be limited to the $10,000 or the inflation adjusted $16,000 per form.
Mm-hmm.
And in trying to decide whether there would be a penalty or not, we have the Internal Revenue Manual, which generally reaffirms there's no requirement to impose a penalty. A warning letter is possible. And generally, the role of the intervention from the Internal Revenue Services to encourage FBAR compliance. Does that
Mm-hmm.
seem right to you?
Yes, I think so. And I'm just quickly looking at the current Internal Revenue Manual, and examiner discretion is still there. If people want to know the precise part of the IRM, it's 4.26.16.5.2. So that gives you the FBAR penalty structure, the penalty authority section, and it's still giving them that discretion.
Well, absolutely. I mean, the statute itself makes it clear that this is both the good news and the bad news, right? The good news is that the statute doesn't require a penalty. The bad news is that
Any kind of promise from the IRS is no longer there.
that's right. Yeah, there's
Yeah.
the IRS is no longer promising conditions under which a penalty will not be imposed.
That's right. And I don't see any update to the IRM changing anything, It's still from 2021, that whole section. So, yeah, that's where we're at.
So, if you were to describe the effect of this, I think we would agree this is not good news,
Absolutely.
but it does not mean that we can expect an avalanche of automatic penalties either. Would you agree?
I don't think so. I don't think so.
At least for now. But
Yes.
I think it does signal I think it does signal
A trend.
willingness of the IRS to impose penalties more often in this area.
Yes. I think, John, my biggest concern are that these penalty-free programs that the IRS has had, I mean, the streamlined programs initially came in 2012. They were revised in 2014, pretty much remaining as they were. Changed in 2014, they remain today. And that's old news. There's been so many enhancements and updates to the IRS website informing the public, special information for taxpayers living overseas about what their filing duties are. My concern is that maybe this removal of the FBAR penalty-free treatment page could portend something further with the other penalty-free initiatives that have been around a long time. That's what my eye is looking at.
Well, I think that certainly makes a lot of sense. I mean, was it 5 or 6 years ago that they changed the language of the delinquent international information return?
Oh, yes, that one they stiffened up as well. Yeah,
Yeah, and I mean that was interesting because it was really the same principle, wasn't it? That what they did was they removed a promise not to impose penalties.
that's right. That's right.
And of course, the problems have been very significant since that time, trying to get some of this stuff in, right?
Yes, I mean, look at all of the issues that we've had, and that's been publicized about the Form 3520 for foreign gifts and people submitting those late. There was automatically assessment of those penalties without reading the reasonable cause statement. IRS then promised, oh, yes, we're going to change that automatic assessment and start reading these statements before assessing a penalty. And, that's gone on for some time. We have a case with the woman from China who became a U.S. tax resident. And in that year that she had become a U.S. tax resident, the first year of residency, she had received some foreign gifts for her wedding. And she realized a couple of years later somehow that she should have filed a Form 3520. She filed it with a very robust reasonable cause statement, and she was still zapped with a penalty and had to take that thing to court. And as far as I know, the court has now remanded and said, it must be determined if she did have reasonable cause, but the IRS is not entitled to a summary judgment that she should have to pay this penalty. So imagine how much money she has spent on professional fees to try
Oh,
and
yeah.
sort this out.
Absolutely.
Okay.
This, I think, to add, if this is the same case, if you're describing what I'm thinking about, in this particular case, I think it's important to clarify that the woman received the gifts before she had spent enough time in the United States to be a U.S. tax resident, right?
That's right, but it was the same year,
Yeah.
and
But
her
it's sort of like,
residency occurred that year. Yeah.
yeah, it was
There's
sort of
very
like,
technical tax rules about the residency starting date and so forth and so on.
yeah, the key point, the key point is that at the moment that she received the gifts, she would not have qualified under the substantial presence rules,
That's right.
right? To be, and then, later in the year through presence in the United States, she qualified as a tax resident for that year after having received the gifts.
Mm-hmm.
And I mean, I find that
The case was egregious, John. There's no better word for it.
absolutely. I mean, it's simply unbelievable. I mean, all of this really shows you how incredibly difficult it is to, you know, fix compliance problems, right?
Mm-hmm.
And how presumptively unreasonable, they can be because, all of these cases arise in the context of people trying to comply with the law.
That's right.
It's really shocking. Well, I mean, I was obviously surprised to see the removal of the delinquent FBAR information procedures.
It just happened yesterday. I think we've got to get the news out there so people will know, because I'm sure there are many that are uninformed, including many tax professionals.
Oh, I suspect that it's only a handful of people who are aware of this, and Virginia, we're in that handful.
Of course, we're always in that handful, John.
Absolutely, and we're out trying to get the word out. Uh, you know, I mean, I think that this is very, very likely to cause a great deal of anxiety.
Yes, for sure.
Well, okay. So thanks for, as always, for the podcast, but particularly on such short notice, making us absolutely pioneers in FBAR education this week, I would say.
Yeah.
And
Maybe I'll do an article for Forbes on this, just get the word out there.
yeah, no, absolutely. And I'll do a quick blog post as well. But, you mentioned your Forbes, and I'd like to mention your blog, and perhaps in closing, you could tell people where they can read a lot of your great stuff.
Oh, thank you, John. Well, I am a contributor on Forbes and writing for Forbes a few times every month. So you can find me on Forbes. Just plug in my name and you'll find it. And if you want to go to the U.S. tax blog, which has a lot of categories, including one for FBAR, you can reach that blog at www.us-tax.org, O-R-G. And yeah, keep yourself informed I would say, John, as the internet has gone wild over the years, we've seen so much slop out there that pretends to be correct advice, and it isn't. And I know that you are very careful with your posts, and I'm very careful with mine to make sure the information is very accurate. And people have to be careful now with what they are reading and relying online because AI makes mistakes. Professionals make mistakes when they're not careful. They're rushing to get something up on a web page. And yeah, it's just a word to the wise to be very, very careful now.
Well, yeah, certainly. I mean, on your AI point, that's absolutely right. I mean, AI is just scouring the internet, right? Summarizing stuff that's out there, and it's essentially garbage in, garbage out. I mean, a lot of it's very, very helpful.
Yes,
Sure,
yes,
but
but you have
it's
to
a beginning.
dig.
It's
You
a
can't
beginning.
just rely.
Yeah, it's a beginning, okay, and not an
Mhm.
end. I have no
That's
doubt, by the way, on the reasonable cause issue, that anybody who claims reasonable cause based on AI is gonna be
right.
all day, every day. Would you agree?
Good luck. Good luck. Well, John, it's always a pleasure. I know you're having some jet lag, and it's very early in the morning for you. I hope you'll get back to sleep, and until our next session.
All right. Well, thank you very much.